Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for April 3rd, 2025. Well, we now know what's going to happen after we raise tariffs. We're getting a really big conniption fit by the markets around the world, and one of the first things I want to say is let's try not to panic. This should not have been a major surprise that we had big potential moves, and hopefully you didn't get caught up yesterday in that fear of missing out rally, because it'd be a painful morning this morning if you did pick up a bunch of trades yesterday. So let's take a look at what is going on. First off, last night, Asian markets down across the board. Australia down not quite 1%. The Nikkei down over 2.25%. 2.75%. I'm sorry. India was down. South Korea was down. Hong Kong fell 1.5%, and the Shanghai was lower by 0.25%. If we take a look at European markets this morning, no surprise, lower across the board this morning. DAX is down 491 points, FTSE down 131, and the CAC down 191. If we look at U.S. futures this morning, at this very moment, Dow futures are down 1,216 points. We've got the S&P 500 futures down 196 points, and the NASDAQ futures down 758 points. So pretty darn bearish day today, and a big reversal of that pop to the upside. Now, there were some clues to be really careful of that pop to the upside. We'll talk about that in just a little bit, but let's take a look at what we've got going on in bonds. Bonds are lower here this morning, sharply lower. The 2-year bond is at 3.78%. The 10-year bond is at 4.07%, and the 30-year bond has fallen to 4.48%. As a result, the dollar is sinking hard this morning, reversing to the downside strongly. So watch that closely today. If we take a look at oil, probably no major surprise that oil is moving lower here this morning. Right now, oil futures down $3.42 a barrel at 68.27 a barrel, and Brent has fallen 3.25 down to 71.71 a barrel. Natural gas is also just a tiny bit lower here this morning by 0.2 cents. So we'll have to keep an eye on those futures here this morning as well. If we take a look at cryptos, pretty rough day for cryptos. Red across the board. Bitcoin reversing that pop-up yesterday, and right now down $3,105 a coin. Ether is also down $108 a coin this morning, and as I said, red across the board. That's even drawing in precious metals. If we take a look at gold down this morning $34.40 an ounce. We've got silver also moving sharply lower, down $1.80, $1.90 an ounce on silver today. Copper, platinum, and palladium are also lower this morning. So pretty big rout in the market as a result of the tariffs. Now, having said that, how about we settle in, let's buckle up, and let's get ready for the Thursday edition of the Morning Market Prep video. Good morning once again, everyone, and thanks so much for being here. As bad as this looks this morning, let's take a look at these index charts and see if it really is as shocking as the futures are pointing out. Well, first off, here in the diamonds, because we had such an extraordinary push to the upside yesterday, being down 1,250 points is just bringing us back down toward these recent lows. So it looks horrible. It feels horrible, particularly if you were buying up stocks yesterday. And it is certainly possible with the energy that we have here today that if the bears continue to push, that we could make new lows in the market. But once again, let's remember, this should not be a major surprise because we are still in a downtrending market. That was clear all along, that we were in a downtrend, that the patterns are bearish in the market. So getting caught up in that fear of missing out and trying to chase in yesterday really trapped a lot of folks, and I think there's going to be a lot of folks hurting today, and I don't want to discount that. There's a lot of folks that have lost a lot of money today. So be conscious of that, but at the same time, if we were able to hold these lows, if the buyers were to step in and bounce or rebound back up off of here, I'm not saying that they will, but if they would, we've got a double bottom formation, which is a very, very common formation in the market. So if those bulls have anything to say today, well, bouncing back up in there, we can start a little bit of recovery here in the diamonds. Taking a look at our moving averages, clearly we had rallied up. We broke that 200-day moving average at one point after the announcement. We had closed the day basically right around that 200-day moving average. The announcement there for a little bit of time, we had futures push the markets higher, and then they completely reversed. So pushing back down here, again, it looks a lot worse than it really is. It feels a lot worse when you look at that futures, but it's just a push back to these lows. So very bearish pattern. The patterns remain bearish even after yesterday's move. They were still bearish. So kind of keep that in mind. If we were to continue to fall here, continuing to fall below this low in the chart, I would probably put us maybe down in here around 400. Could potentially be a target here for the Dow if we were to continue to fall. Let's take a look at our SPY. Now SPY, a little bit more on the critical side, because what we're going to do this morning is we are going to open near a new low. So we are once again confirming that this lower high followed by a lower low is that this downtrend is true, that we are following the downtrend. That did not change yesterday, even with that bullish push. So it shouldn't have been a major surprise with such a report coming that we had that potential of pulling back. Now, I had no idea if we were going to gap big to the upside on the news, gap big to the downside. Well, now we know, and a pretty ugly reversal here on the day, making a lower low. So if those bulls can find inspiration in here, bouncing up off of this area here, well, we could push back up and retest these areas and maybe push on higher. And so watch that closely here. If we do break this area of price support, next price support lower, probably going to be down in here, somewhere around the 530 area of the chart. And that does seem possible. If the bulls can bounce us back up, we'll start retesting these lows and these resistance levels back to the upside. I would not rule out the possibility of a whipsaw. If we take a look at our QQQ making new lows yesterday. We're already bouncing up a little bit off of yesterday's lows here in the futures, and you can see, as bad as it is, it could be worse. Again, bearish pattern is continuing. We continued to, even as we pushed up yesterday, We didn't break the downtrend. We still have the lower low, and we followed through to, a lower high. We followed through to lower low. So should not have been a major surprise that that was possible. That being said, really ugly reversal, and it's just doggone mean that they did this to folks yesterday and that folks kind of fell into that trap. Now, if the bulls can find inspiration here and hold this area of support, well, we just start that rally back up, see if we can test those resistance levels in the chart. If the bears, however, continue to push to the downside, I would suggest maybe down in here as possible. Down there around 448. And if we look at our moving averages in here, I had suggested that when we fail the 200-day moving average, it's not uncommon that we seek out the 500-day moving average as a support level. And you can see if we move down here to this next level of support in here, well, we're not even close to the 500-day yet. So it is possible this could get much worse. We'll probably do a little bit of a relief rally here soon, and then we'll have to be watching that downtrend in those resistance areas if we continue to fail and drop on lower. I didn't mention that in the SPY, but if we take a look at the SPY and look at our moving averages, we're still a long ways away from that 500 as well. So it is possible that on any rally back, we continue to follow this downtrend here in the chart, and we could see bounce back and continue on down. So watch that carefully here in the SPY. Our IWM also big old nasty whipsaw. You can see yesterday we popped up right into the downtrend on that little surge. After the announcement, we surged up in the futures there a little bit, but we continued to follow this downtrend. Lower high, lower low, downtrend is in play. So if we take a look in here, next level of support lower might be right in here. May not have that far to go here in IWM, down around the 188 area. But if that were to fail, if we break down through that area here, I think there is a real possibility we could come down into the lower 80s here for that next level of price support. Now, what we've got going on here in IWM is we have already failed the 500-day moving average. So we'll want to be watching this one for that possibility of that oversold bounce, maybe even first. So watch that carefully here in IWM. If we take a look at our VIX yesterday kind of whipsawed around in that move. We ended up closing the day on the VIX right here at the top of that big white candle. So we really hadn't changed much in here, and I'm guessing what we're going to see this morning is this is going to be sharply higher here on the day. So watch that carefully. We could gap big time here in the VIX, see that volatility rise, making things uncomfortable, particularly in the options market. So watch that carefully. So far we're still holding onto this upside trend, and we may actually end up increasing the trajectory of that trend here today. Keep an eye on this area price resistance, and if we break through there, I could see the possibility we could gap right up into here and maybe go beyond. And I know that sounds like it's impossible, but remember back over here in August of 2024, we spiked all the way up here into the 60s on the VIX. So it's not uncharacteristic, but watch that closely. Try not to panic today. If we take a look at T2122, by the way, something I want to remind everyone of, as bad as this feels right now, remember what's happening here is we're putting stocks on a discount, but they're all being pushed to the discount bin. And when that occurs, really good stocks are on sale. We can buy them much cheaper. So as long as you don't lose your money in between, there's going to be some great deals to be had once this sell-off is over. So just kind of keep that in mind. Now, I don't know when this sell-off is over. If this is going to be a true corrective market, we could see a downtrend occur. Typical corrective markets or bear markets can last 12 to 14 months. So we may have a little bit more pressure here in the market that we're going to have to deal with. Today may not be the end of it, but that being said, great stocks will be on sale, and you'll never find an easier way to make money in the market. Let's take a look here yesterday. We had rallied significantly on the day. In our T2122, we were up here at about 80% of T2122, which meant those bulls had a little bit more room to move to the upside. But I want to remind everyone that while we stretched up big time there in T2122, we could barely break the 200-day moving averages, and sometimes we weren't even able to get above the 8 exponential moving averages in the charts. So this was a warning sign. This was a warning to be really careful with this move and watch for the potential whipsaw. No one expected it to be as extreme maybe as what we're seeing right now, but that being said, this was a little bit of a warning sign. So this morning, my guess is what's going to happen is we're going to open this up down here in the bullish reversal zone. So again, don't panic. We get into the bullish reversal zone. If we start to firm up here a little bit, we could see that rally start to come back in, that relief rally to push back up after the shock of this is over. If we take a look at T2108, now our T2108 is also pushed up here yesterday, but here was another clue. We were up a huge number in the markets, and the best we could do is get the T2108, the percentage of stocks above the 40-day moving averages, is to about 31%. Now, it was an improvement. Excuse me for the cough there. Choking on my own words here. If we take a look, we weren't really able to break through that resistance here in the chart. So now, expecting this to be sharply lower today, we'll see if some of these support levels down in here are capable of holding us. If not, you want to be aware that we can go lower here in T2108. If we take a look at T2107, percentage of stocks above the 200 rallied up to 32%, but unfortunately, as you can see, as we pushed up, we were not even able to break some of these resistance highs here that we'd seen recently in the chart. Again, a warning as we were stretching and pushing. It looked like to me that the market was baiting people into the market for this. So hopefully you didn't get caught in that situation. And then our T2101, in that big bullish move that we had yesterday, the breadth of the market declined. So we're in a situation where most of our companies are in their blackout period. Most of our companies are unable to do anything, can't do any corporate buybacks, anything like that, as we're heading into earnings. And I mentioned this before, earnings don't begin until the 11th of this month. So it's very possible we could stay in a very choppy, wide range consolidating period here in the market as we wait for those earnings to see if we can find some kind of push to the upside. Okay, so nothing terrible here. We've been here before. This is just a real ugly day in the market. Try not to panic. Let's take a look at our economic calendar here for today. And I wish we could say the chances of volatility died with that report yesterday on tariffs, but I don't think so. Challenger job cut report here this morning. We'll want to be keeping an eye on that here today. Let's see, has it already? No, it hasn't come out quite yet. So keep an eye on that. We've got an international trade in goods number that will be coming up. This is one of the things that these tariffs are hoping to help repair. International trading goods deficit situation. Their consensus is looking for 122.7 billion. That is an improvement over the last time. If we take a look at international trading goods, jobless claims are expecting 226,000 in those jobless claims. That would be pretty darn good. Holding in here, no major effects in the claims. So watch that closely here today. If that comes in like that, that could be a reason for bullish inspiration. If we take a look, we've got a PMI composite. I don't know why they didn't give us a composite estimate in here. I'm guessing it's going to be relatively flat in here. 51.6 was the last time. The flash was 53.5, an increase. I would guess it's going to be somewhere in that range. Services, they're looking for that to increase just a little bit to 54.3 up from 51.0. And then if we have notice in here, we've got an ISM. They're suggesting that falls just a little bit to 53.0 from 53.5. This is the one I'd be watching kind of closely, that possibility that this could fall even lower in some of the numbers that we've seen here lately. So watch that carefully. Now we've got a natural gas report that will be coming out. We've got some bond auctions, some Fed speak here today, and a Fed balance sheet. Remember, as we cross over into Friday, we get that big employment situation number coming up tomorrow, and Jerome Powell and several Fed speakers in here with a Baker Hughes rig count to prepare for. Let's take a look at our earnings calendar here today. Now, our earnings calendar, we've got a little bit more going on our earnings calendar. I'm not sure it's going to matter all that much with the kind of pressure that we're seeing here in the market, but you never know. Take a quick screenshot of that, and then we'll take a look at those stocks. Let's go here this morning. AYI is trying to go just a little bit higher here this morning on its report. We've got ConAgra that is moving lower this morning. LW will be reporting today. We've got LNN that will be reporting, and a nice little pop trying to break that downtrend here in the chart. See, there is bullishness in the market today. And then if we take a look at the last one, MSN today will be reporting. So keep an eye. Is it MSN, or I think I may have typed that one. Yeah, that's not right. It's MSM. I got to fix that in my post here. MSM is the one. So watch that carefully here today. After the bell, we've got Guess Jeans. We're going to get SLP in here this afternoon, and that'll be our notables for the day. And if I remember right, I think I've only got like one notable for tomorrow. So really dropping off here in those notables, which is normal as we head toward the next round of earnings. Let's take a look at a few stocks that could be setting up for today. But before we do that, everyone, if you could do me this quick favor, if this is the first time you've seen these videos, please click that subscribe button on YouTube, and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be worthy, if you could do me that favor, click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. You'll want to watch that pretty closely here in the market and here in the YouTube channel. If you don't do those things, well, the algorithm just doesn't show the videos to more folks, and it just doesn't grow so much. So thank you to everyone who takes the time to do that. I really, really, truly appreciate it. It helps an awful lot. And if you share these videos out on your social media feed, that also helps a bunch. So thank you, everyone. Let's take a look at some stocks setting up. Remember, everyone, these are not recommendations to buy or sell any security. Today might not be the best time to be doing a whole lot of buying because the implied volatility is going to be very high, particularly if you're looking at options. Could be pretty wild. Might be a good day for some credit spreads, ratio spread trades, something like that to get you away from that volatility and actually take advantage of that volatility. But let's take a look at some of these stocks. First off, take a look at EA. EA is continuing to hold in this bullish pattern, and something going on in the gaming area here. A little bit of bearish pressure here, and I wouldn't be surprised if the bearishness of the market kind of helps drag that down a little bit. But EA holding up, and if you take a look at TTWO, Take-Two was making a good push to the upside yesterday, then pulled back by the close, and you can see a little bit lower, but nothing wrong with this chart. It may just need a little bit more time to rest in here on a Take-Two. Mostly what I would do is I would steer you all toward the defensive sector type stocks today. There could be some nice bullishness here, and I think one of the things that we've been seeing as we've been ramping up to this tariff, we have been seeing these defensive sector stocks garnering some support. I think institutions have been shifting toward these dividend-paying stocks, shifting toward the safety plays, and, well, they kind of trapped a lot of people into a bad market condition. They needed somebody to sell to, and so they got that done yesterday. So watch this closely. Things like AT&T, Verizon, TMUS in this sector, all trying to show a little bit of bullishness here today. You'll want to be keeping an eye on things like Constellation Brands, things like Mondelez. Those are Mondelez, maybe a double top. We'll have to watch that closely, but it is trying to pop back up here this morning. Take a look at things like Altria and Philip Morris. Look to some of the utilities out there, things like AES holding into some of these bullish patterns. With the dollar falling like it is, that's going to be potentially good for, or those bond yields falling, good for utilities. So take a look at some of those utilities, good dividend payers, good places you might find a little bit of safety. The miners, looks like the miners could get hit just a little bit. Whoops, I want to do GDX. Could get hit just a little bit today as gold pulls back, but there's nothing wrong with those. They're still holding in those good support areas, so keep an eye on those areas of the charts for some bullish potential trades as well. And there are quite a few in that defensive sector that are holding up and looking pretty good. So look to that area of the market. On the short side of things, you might want to be kind of keeping an eye on some of these industrials. Looking pretty ugly here in John Deere. Downtrending, pretty ugly reversal yesterday. That possibility that we may lose this support in here could be a pretty decent short. Caterpillar continuing to push back down, and if it loses this recent low, I would look for more lows to potentially come into that. Boeing has had a pretty strong pullback from this area here. Maybe we catch a bounce in here, maybe we continue that sell-off, but some of those industrials might struggle here for a little while in the market. Obviously, we had some pretty good bounce backs yesterday in some of the tech sector, but when you look at Google here, Google is still in a downtrend. There's no question about it. Still have that possibility for more lows here in Google. I'm going to say the same for Microsoft. Still moving in the downtrend here, failing at the downtrend yesterday on that reversal. More lows could be possible. Look to some of those big tech giants that could suffer here just a bit as we kind of come to grips with what this tariff situation is going to be. So certainly some bearishness out there, and there could be some good opportunities to the short side of the market. So with that, everyone, hey, I want to wish you all a fantastic day. Just remember that this will pass. This is not this is a normal market. Every once in a while, the market needs a good repricing, and we may be starting that process here for a good repricing. I know it can be painful if you're only looking to the long side of the market, or if you've been caught in buying up yesterday, just assuming we were going to rip back to the upside. I'm sorry that occurred. Hopefully, you heard from me the caution yesterday, and you didn't get involved in that. You still have preserved your capital. I don't like markets that look like this. I'm not giving you that. I don't want to give you that impression that I like markets that look like this. But what I do like is when really good stocks go on sale. So all we have to do is be patient and wait. And if you want to learn some more about that, you can come on over to the RWO trading room. We'd love to have you. We've got a trial going on for just $7 for a full month. And you can see how we can take advantage of moves like this and make money in the market. So if you're interested in that, I'd love to see you there. Everyone, take care, be safe, have a wonderful day. I'll see you right back here bright and early Friday morning. Wish you all the very best.